Hello and welcome. This is Kathleen Levito, Marketing Coordinator with AAFMAA, the American Armed Forces Mutual Aid Association. Thank you for attending today's webinar on the VA funding fee. This monthly webinar series is brought to you by AAFMAA Mortgage Services, LLC, also known as AMS, which provides mortgages exclusively to the military community. Whether you are looking to build, buy, or refinance a home, we can help you. This educational webinar seeks to provide AAFMAA members and prospective members with information about recent changes in the mortgage industry due to COVID. With us today is John Lavelle, Military Mortgage Advisor with AMS. So I will now go ahead and turn it over to John to begin the presentation.
Hey, good morning. Thank you, Kathleen. Again, my name is John Lavelle. I've been with AAFMAA for just over 2 years. My background is 17 years in the mortgage business, and I'm a veteran myself. So the funding fee and taking care of our veterans it means a little bit more than perhaps others. I'm not sure, but that's just a little bit on me. And we're going to cover a few things today. And the big thing is, many don't understand the benefits of what the funding fee is. So I want to cover what is the funding fee, who pays the funding fee, what are your options, and the benefits of the funding fee. The VA funding fee is a one-time loan fee paid to the VA. This money is used through the VA to help pay for a variety of veteran-oriented programs, including the VA home loan program. So, as I had mentioned, who pays the funding fee? The veteran typically does 9 times out of 10. There are abilities for seller concessions to pay the funding fee, but in my 17 years, I don't know that I've had the seller pay it. Basically, the veteran does, it gets rolled into the loan, so it's not a fee that will hurt their bottom line when they go to purchase their home. And what are your options? Okay, so there's a variety of different avenues for the funding fee. So if you're an active duty veteran or someone that's out of the military and you've never used your funding fee, it's going to be a 2.3% fee that's added to your loan. Now, if you've used it before, and we're going to use it again, you've got entitlement restored, so you can use it again. You're not limited to one-time use. However, the funding fee is a little more expensive at 3.6%. Now, if you're like in today's environment where you're selling a home and you've netted a great deal of money on the sale, you have the ability to put money down. If you put 5% down on your purchase, the funding fee is reduced to 1.65%. If you have the ability to put 10% down, the funding fee is reduced to 1.45%. Now I'm going to touch on these down payments real quick. You're thinking, well, if I have money to put down, wouldn't it be beneficial just to go conventional and eliminate the funding fee altogether? Well, I'm going to tell you probably not. And your military mortgage advisor would actually run the numbers to see what makes sense. But typically your government loans, your VA loans, are going to come with a lower interest rate than a conventional loan. So the math will speak for itself as to what's most beneficial. Another avenue of the VA funding fee is if you currently have a VA loan and you simply want to streamline that rate down to a lower rate, here's the beauty of the funding fee. It's reduced to 0.5% on a VA interest rate reduction loan. And that is fantastic because it reduces the cost significantly and you get a better rate. And here's the last one. If you have any type of VA disability pays from 10% on up, you're going to be exempt from the VA funding fee. And I would just give the caveat, let us look at your particular situation to make sure that this applies, but it 99% will apply. Okay, so the benefit of the funding fee. So as I'd mentioned, I've used my VA loan twice to buy homes, and I've refinanced with my VA. And what I found in my own particular situation is the benefit to a VA loan is the lower interest rate compared to a conventional loan or even an FHA loan. If your options are a conventional loan, you can plan on putting at least 5% down payment. Here's a caveat that I haven't mentioned, and shame on me. Your VA loans are 100% financing. You're not going to find any conventional loan unless it's subsidized through a state housing plan that's 100%. So with the rates being higher on conventional loans and the fact that you're not going to get 100%, that to me is the benefit of paying the VA funding fee and using your VA loan. Okay, so I've just put up some examples here just to show you what it would look like when you use a VA loan. And I've actually got some examples of what it would cost, from a payment standpoint. So if you took a conventional loan at 200,000 with no funding fee, and because rates have crept up, if you're going to do that 200,000 at 3.25% on a conventional, your principal and interest is going to be $870. Take that same 200,000 with subsequent use, multiple use, you've got a loan amount of $207,200. You're going to, at 2.5% on a VA loan, you're looking at a principal and interest payment of $818. That's a $52 spread. Your loan amount's a little more, but you're going to save more. So there's the benefit right there. And you can see the reduction in the fee if you put money down. And I personally, I have loans in the pipeline where I have people putting 5 and 10% down, and I've done the math versus conventional loans. And my VA loans win hands down with interest rate and lower payments. So the questions that you might present, am I exempt? Well, again, we will determine based on any VA disability pay that you get. And any of our AAFMAA military mortgage advisors will know the questions to ask and what documents you may need to provide. We will also get a certificate of eligibility through the VA that will tell us as well. So if for any reason you are uncertain as to, what your status is, we will have the ability to help you get that. Should I put money down? Well, again, every scenario is going to be different. And I will put it to you this way. If you have the ability to put 5% down, here's what I tell people. Let's analyze what your payment will be. Let's see if it's more advantageous to keep that, let's say $10,000 in your pocket, because you may have to furnish a home, instead of saving $75 a month. Your military mortgage advisor, whether it's me or whomever, we're going to run the numbers just to help you make a decision on that process. And should you pay out of pocket for the VA funding fee? That's going to depend on your financial situation. I mean, and again, as your military mortgage advisor, I'm going to run the numbers and I'm going to discuss the pros and cons with you. And ultimately, yes, the decision is yours, but I'm going to be there for guidance for you. First and foremost, if we're talking about a VA loan for you, you've done a good service for our country and like myself, and we want to give you a big thanks for your service. The VA loan program is a benefit that you have earned, and we want to make sure that we give you the best mortgage, the best service, and address every concern so that we can meet your mortgage needs to the best of our ability. So thank you again for your service.
Thank you everyone for joining us today with this webinar, and thank you, John, for the great information. If anyone watching has any questions, please feel free to reach out to John directly using the information on the slide, or you can visit AAFMAA Mortgage Services website for general information, and that would be afma.com/mortgage. Thank you again for joining us today, and we look forward to our next opportunity to assist you.